Hello, I'm Gille, the editor of Unquote, and I'm here today at the IPEM conference in Cannes. It is my pleasure to have with me Nino Tronchetti Provera from Ambienta, and we're going to talk all things sustainability and what are the opportunities that you see in the market at the moment. I'm really looking forward to that.
Looking forward to that.
But first of all, to introduce yourself a bit more to our viewers, can you tell us a bit more about what Ambienta does and the history behind it?
Ambienta is a pan-European private equity firm investing with a control attitude, so growth and buyouts, in businesses which have an edge on sustainability, resource efficient and efficiency and pollution control, which means that we are sector agnostic. It's a theme for us. Our first fund was a 200 million fund in 2008. Our third fund is just started, is a 735 million euro fund. And the reason we tripled the asset, the fund size in 10 years is because of performance coupled with sustainability. We focus on the mid-market, and within the mid-market focus fund, we are one of the few having a research department, so knowledge management, trying to spot sustainability in every single industry, understand how sustainability is reshaping those industries, and one figure I really like is the fact that out of the 29 deals we have done so far, 27 have been primary deals. Okay. You know that everybody speaks about Mittelstand, the family-owned businesses, is the holy grail of the European private equity, but it's very hard to unlock those businesses, and we prove that we are able to do so.
Okay, and what are the main trends that drive the investment opportunities that you see on the sustainability side?
But listen, first of all, let's frame what sustainability is. Human population moved from 2 to 7 billion people in the last 60 years, is now moving towards the 10. People say that if everybody would consume at the pace of the United States, we would need more than 4 planets. Simply speaking, human beings are consuming too many natural resources and are producing too much pollution. Big issue for humanity, big opportunity for all these people, all these companies able to produce the same output using less input, or to produce the same output producing less pollution. Couple of examples, because of course this can be found in every single industry. Take chemicals. Without chemicals, our life would be much shorter and much worse, but needless to say, 2/3 of the chemical production is very hazardous for human health. So, for instance, we invested in a company called Oscar Nolte doing water-based coating for furniture, because water-based chemicals are a big highway to sustainability. Take food. You have 2 big issues in food. Number one, 57% of the resources we invest into producing food never make it to our mouth, so there is a big productivity gap.
Are you talking about waste, or how?
From agriculture to food processing to the logistics, cold chain.
It's just the inefficiencies every time that add up.
So for instance, we invested in a company called Safing that makes valves that make tractors more efficient and therefore save some oil that is used by those tractors. The second issue in food is the healthier food. 80% of the growth of the food industry in the Western countries in the last 5 years it's linked to organic, healthier food. We just invested in a company called Aromata that produces natural coloring and natural flavor for food. So you have those big mega trends, and we try to invest in companies which are fueled by those mega trends.
And historically, I mean, you've touched upon performance already when you mentioned the funds that you've raised. But historically, I think that there might have been a tendency by some investors, some LPs, to view it as a bit of an afterthought, or think that if you're focused on that area of the market, on sustainability, you won't necessarily have the returns that more traditional PE models would offer them. Is that something that you still have to address?
But you have been very diplomatic, because historically there's been a massive disruption of value and therefore money into the green investing. In a nutshell, at Ambienta so far, we delivered north of 20% IRR. Our last exit was at 10.1 times X. So we definitely are top decile in terms of performance. So people often ask us, what do you do differently? Number one, most people link the concept of sustainability to energy and climate change, a few subsectors, renewable, electric cars, very often linked to subsidy. We don't invest in businesses that rely on subsidy. What I tried to explain to you before is a mega industrial competitive mega trend. It's a completely different thing. Number two, most people invested in new tech. At Ambienta, we simply invest in normal companies which have an edge in sustainability, and we help these companies to scale internationally by applying what private equity has been, the good private equity has been doing in the last 50 years. You install a level of sophistication management into these companies, and once that is there, you grow, you accelerate the growth. Our companies booked revenues in 104 countries last year. They grew by 11% their revenues in 2018 and by 19% their EBITDA. So this is real companies and real growth.
And that
it's
resonates.
not hoping that, saving the planet, you will make some money eventually.
And that resonates with investors, obviously, because fundraising has been good. And that's thank you very much for that. Really appreciate it, Nino. It was a pleasure having you with us today. And thank you very much for watching.
Thank you very much. Ciao.
Thank you.